Investors and traders, welcome to the channel Market Chart Pattern. Today is 20th of December 2024. Hope everyone is having a great day. We'll be taking a look at the key US markets and we'll be focusing mainly on the US stock indices. And then over the weekend on Sunday, I will be releasing a longer video in which we cover many other markets and also take a deeper dive into the stock indices. As always, this video is for educational purposes only and it is not a financial advice. So let's have a quick look at the US dollar. This is the weekly chart of the dollar index. This is the futures. And here dollar, as we know, after hitting our target right here, it's been very strong and it's just tested the upper end of this range and it's actually gone above that, and now we have this target of around 108.90. That's where we have the 78.6% retracement coming in from all the way back to the highs of 26th of September 2022 to the recent lows of 16th of September 2024. And there is potentially going to be a fair amount of resistance around here. What we have already started to see is, although the market is very strong, we are beginning to see some pullbacks, and there's a possibility we could see one more high, so a higher high compared to this one, and it just reaches our target, and it could turn out to be a pretty strong resistance. However, the market remains very strong and it gets above this level, then the next level we are looking at is 111 and 45. But that could really mean that the dollar is so strong that could eventually go back all the way to the highs of 26th of September 2022. So here, what I am kind of expecting is that some weakness to come in the dollar when it reaches our target right here. The other possibility is the market, whilst trying to attempt to reach this, could actually begin to go into a trading range. So before pulling back or even a change in trend, the market from a strong trend transitions into a trading range and then possibly even a reversal then. So what's happening right here is, let me actually show you by an example right here. You can see that very strong bullish move, and then we began to see candles like this is where the market began to transition into a trading range, and it just went into this trading range for about a month and a half maybe, and then we began to see actually a reversal and a change in trend. So we'll just keep on watching the price action, and what we are beginning to look at is perhaps some earlier signs of what is likely to be a upcoming trading range, because what we have seen is one negative week here, and then it's gone up, and this at one moment in time was very strong this week, especially when the Fed came out that day, but as it has given back some gains. So we begin to see these VIX right here. Maybe if it's able to do another one like this, then we could have a potential three drives to a top pattern like this, which will also be a a wedge pattern like this. So we'll wait and see what sort of pattern formation we get. And if we just move back to the daily chart here, we can see that it has clearly gone above or taken out the stops around here, or generated liquidity, however you want to phrase it. But these were double tops here. There was a top, double top, and then there's a top here, double top. But this market, after reaching our target to the downside, has been very strong. So look, a very strong move in the dollar on 18th of December. That's when the FOMC happened, and Federal Reserve actually delivered a rate cut, which was actually in fact hawkish, because the signal that moving into 2025 there will be less rate cuts because of the outlook on inflation and being highly data dependent. So, but what we have seen is actually some of these gains just being given out today. Just before the Wednesday, what we were looking at was a potential top around here, and this looked more like a retracement back then, but this Wednesday was really an outlier. Very strong move, and what we are seeing right now is just the market flirting around with the top of this, and then coming back into the trading range. So there we go. This is the kind of price action we are getting, and if it begins to pull back further, getting below 106.57, which is 20-day moving average, this is something shorter term traders really look at. And it basically begins to close below the lows of the 18th of December, and then maybe we could have seen some sort of a high in the dollar. This is how we are looking at it. Now let's actually take a look at the U.S. stock indices, the gold and the bonds. I will cover in Sunday. This video is going to be a little bit shorter one, so this is what everyone is actually watching, the price action that took place in the stock indices. So this is Wednesday when the FOMC meeting happened, and we saw a move in the S&P and in the other indices, stock indices, which is something, according to some news outlets, some pundits, we have not seen since 2001. So it was really an outlier kind of an event from a daily basis. Really, really strong move to the downside, and then the following day we had some of a follow through, and then we are seeing reversal. Now, why is this one really important? If you recall the earlier video, we were actually looking for a pullback. So I was looking for a pullback right into about 607 6,000 level. It does this little ABCD pattern right here, and then if it is held, then we could be looking at a start of a center rally. But what we got is actually more than a pullback. We got more of a correction. So I'm going to remove this, all of this, because we have to redraw things. So let me actually just quickly remove this. Here we go. Here we go. And I'm also going to remove this because things have changed a little bit. Here we go. So one of the things is when the down move began to happen, there were certain trend lines that people were watching. Perhaps they began to actually break, and it's just not on the S&P 500 index, but also nasdaq and some individual stocks as well. So we had this channel, a really nice channel, moving right here, and it actually also closed below the bottom of this channel. So that has some significance. But really, where the market stopped is really, really interesting. So if we just go back to this pullback that took place in late August to around, I believe it was around 6th of September, and we just draw this, which is our market symmetry concept that we discuss here a lot, and we just clone it, and then we bring it right here, and then we just project it from the top. And what do we see? We see a move which is equal to this move, and this was the largest pullback that we had seen in this channel or in this up move higher since earlier September, and we have had a pullback thus far which is of a similar magnitude. And if we were to look at this from a percentage point of view, we had something close to about 4.45% move to the downside, and I believe back then we had a move of about 4.45% as well. So we have symmetry in percentage, we have symmetry in absolute terms, and the key thing is the market actually went right to the 38.2% retracement of this September low. So let me actually draw it again for you. So I'm going to grab the Fibonacci tool, and we just draw it like this from the lows of 6th of September, and there we go, right to the tick of 38.2%. The low was today 5832, and this is the cash market, and the 38.2% retracement. With we have to give it a little bit of plus minus because the way I draw it by hand, so maybe the low I pick might not be 100% accurate. So 5833, there we go. And let me actually move this one a little bit away, this one. And right below this we also have the 89 period moving average, which is a little bit below that. So there we go. This is this market symmetry concept that we look at in the markets again and again. So this is some educational value. Long-term subscribers will know that we pay close attention to this, and of course this 38.2% retracement from here is key. And let me actually also write it down as 0.382. Make it smaller. Here we go. That's it too. I think that should do it. Here we go. Now, what is key is if this market breaks this low, or in other words, begin to go below 38.2% retracement, then the market symmetry will be broken, and we could be looking at lower prices, and that's not going to be actually a good scenario. We could definitely have a deeper correction, maybe even up to 9 or 10%, something that we have seen in S&P 500 in the past. If you go back to the middle of July, that's when the carry trade scenario was taking place, the unwinding of the carry trade, and we saw the Japanese central bank come into the market and manipulate the currency, the unwinding of it, and we had this ABCD sort of correction here, but this one was 9.75%, so roughly 10%. So exceeding that, in my opinion, then could lead to a scenario where we could have, we could have another 6% to the downside, so altogether maybe about a 10% move. And if we were to just think about that scenario, a 10% or roughly 9% move could actually bring this down to about 55.30, 55.50, and let's see if we'll have some Fibonacci retracement there. We'll have the 78.6% retracement, but then we also have to look at the one below this as well. So here we go. We will have the 61.8% retracement come nearby. So looks like 5500 might become the kind of the target if this low actually is not held. So right now, very important to keep on watching this level in the cash S&P 500, also in the futures. I'll show you the futures chart just now. But for now, it's just really fantastic. The market, in my opinion, has held a key support, and now what is really important and key is that the support is held. Okay, so really good, a really large move intraday on futures. Is a little bit different. Today the market was up by 63.77 points, or 1.09%, and on the futures, here we go. And on the you can see the candle looks a little bit different. It found resistance from the 20-day moving average, but here again it found support right from the 38.2% of this September 6th lows, and it's a symmetric move. Here we go. And in terms of the percentage, it's roughly about 4.74%. The move in late August to September 6th bottom was about 5.1%, but on the cash they are really equal. So we have same symmetry. I've just not drawn the channel on this one. On the cash I have. So the futures market and the cash market, they were kind of in line together. I have not checked the SPY. We can also check the SPY here, because there are a lot of option traders that come and play in the SPY. So let's have a look here. And yeah, so in SPY it actually exceeded this one. This is something interesting to make a note of. And if we take a look at in terms of the percentage, we have 4.3% back in late August and September, early September, 6th of September, and we had 4.64% pullback right for this recent one. So interesting scenario. And now we'll switch over to the NQ. This is the nasdaq 100, and this one is a little bit difficult to analyze because of the the rollover that happened, but we have had this pullback. Let's see what we saw in the S&P 500, whether that is actually applicable here. Not exactly 100%, because it is a stronger market, because it has been leading. So the tech has been leading. The pullback has actually been less. So let's see if we go back to the September, draw our retracement, and here we go. The 38.2% retracement comes lower, 20,865. The low had been 21,006 and a half. So it missed it by quite a bit actually. Could the market actually go and touch this? There is a possibility, but in the S&P 500 we have that pattern completed. So we'll just keep on watching this one. Let's see what the NDX did, because that's the cash index. Okay, here we go. So on the cash index, let's draw the retracement first. Okay, it misses the it does miss it. And in terms of symmetry, yep, not quite there. So but it's a stronger index, so maybe that's possible that the stocks which pay which are heavyweight in this one, they remain strong. So that's why we have this not even reaching the 38.2% retracement from this low. Now let's also take a look at QQQ. So QQQ is again similar story, just eyeballing it. So this is what we are looking at in the nasdaq 100. It remains a stronger market in comparison to the S&P 500, for example. Now let's take a look at the weakest, which is the Dow Jones. So this is the futures chart, so let's start with that. And this one is actually setting records. Let me actually remove this one. Okay, here we go. Let's remove this. So this one has actually been setting records, because look, for the number of days it's just been coming down, down, down. And according to CNBC, this is something which Dow has not done since 1974. Now the interesting thing you keep a note of is this is the longer term moving average that I like to use, which is the 89 period moving average. Why 89? Because this is a Fibonacci number. So it's just touched its lows, and so far thus far it has respected that. But also make a note that it also had a channel, and this trend line, it broke below that. We'll actually also take a look at the cash index a little bit later on, but this one is an important thing to make a note of. And if we go back and draw a retracement from the September lows, let's see what do we get here. So clearly it broke the 38.2% retracement from the September lows. And if we just go back to the August lows, it has actually held that. Now the reason I had to go back and use the August one is because this market has been much weaker, and there is going to be some relationship from this low as well. So let's actually draw this, because this is how you find the harmonics in the market. And there you go, you have the 50% from this low. From this, let me actually draw it like this. This one is 38.2%. Okay, so let me actually do 0.382. I hope you guys will find this video of educational value. And from this low, I'm gonna change the color as well. Here we go. Let's make it black, this one. And here, this one is 50%, 0.5. And let me actually make this also black color. Here we go. Let's see what's the relationship from this important low, and boom. Oops. 78.6%. Okay, so there we go. 6. Let me change the color. Let's just make this orange, and let me draw also a line like this. Make it orange, And then one more relationship that I would also like to check is the expansion. Okay, and 1.272, not 100% 1.272, but it is close by. So we also have a 1.272 expansion like this. Let me change the color, and I will actually make it dotted like this. So what we have is this plus um, 0.5. So this is a retracement. Okay, I like to type it in caps. Plus this, plus we have the 0.786 retracement, plus we have the 1.272 expansion. Okay, um, and all together, let me remove these. Okay, it means it's a very strong support, because all of these have come together at a Fibonacci relationship. So we have a confluence of 3 retracements and 1 expansion. And if I go back and see if there is this symmetry thing that we like to take a look at, and we do have the symmetry, but it's a little bit further down. So not 100% symmetric to this decline that we had seen, but it is similar to this leg of this decline. There you go, very close. So in my opinion, I think as long as Dow holds the low of Friday, the 20th of December 2024, which is at 42,496, we have a pretty important bottom or a low in place, and as long as it's not broken to the downside, the chances are we are going to see higher prices, because we have a number of these relationships coming exactly at this point. So keep a note of this, and we have a 38.2% retracement of the September 6 lows done in the S&P 500 cash and also the futures market. Nasdaq did not come close enough to the 38.2% retracement. It's a stronger index. Now let's also take a look at Russell 2000. Well, let me actually also show you the cash, because in the we had a rollover in the futures. So I'm not going to do all the relationships. I think that as a homework, you guys can do it yourself. I've just shown how it's done on the futures, but here we go. It has held this 78.6% retracement of the lows of this one. So this is the cash index, and let's quickly check the um, there we go. So on the cash, we have the exact 1.272 expansion. So in my opinion, it's very important to actually use the Dow cash, not just the futures, but we also like to take a look at shorter term moves. This is why I'm using the futures. Before my timing analysis, I'm always using the cash index. So the cash index in Dow Jones is very important. It's one of the oldest indices. It's got the most historic data available, and the Fibonacci analysis works really well on the Dow Jones, in my opinion, and my opinion is based on the backtesting that I have done. All right, so this is what we're looking at, and now let's take a look at the Russell 2000. This is the futures chart. All right, so you can see that Russell has actually been one of the weaker ones. So we can try doing something similar. Let me actually remove that. And let's try to find the relationships in terms of the retracement. And you can see that this red line is actually the trend line that we're following. So obviously that has been broken. So let's see what sort of relationship we get here. So it's about 50% from the the 5th of August lows, and a month, September 11th, we had a low, and this one is yeah, 61.8%. All right, okay, and I'm not gonna take this low. You could probably take this low for the analysis. Um, the reason I'm not taking this one is they're very close, but there is an argument that could be made is because this really strong up move really started from here, and there is not too much of difference. So sometimes we can also take this low as well, and then finally we take a look at the expansion. There we go, and we take a look at the 1.272. So let's actually draw it like this. So this is the 1.272 expansion. This is our 50%. Okay, let me actually write it down. 0.5 retracement. Let's actually make it same color. So that's gonna be this color, or very close to. I'm not exactly sure what color I had used. Doesn't matter. The concept is more important. And this one is now I'm actually forgetting the retracements, so I have to move this a little bit. So that was 50%. This one is 61.8%. You know what I can do is change these settings and bring it to the right hand side. Easier this way to see for everyone. Labels to the right. Okay, and this one was 61.8%, 1.272 expansion. So this one, and then 0.618 retracement, and then we have the 1.272 expansion. Okay, I'm using the same colors here just to make the video a little bit quicker. We are approaching half an hour, but I believe you guys will find it of a really good, great educational value. And if we just go back and take a look at the concept of symmetry, no, so the August, that decline July to August 5th was deeper, so we haven't reached that, but I think we have also hit some really key support today in the Russell 2000 index as well in futures. And what it means is, as long as the Friday lows, today's lows are not taken out, we are looking at higher prices, and this is the confluence of coming up two retracements, one expansion, and also the market symmetry in the S&P 500 is there. We looked at both the cash index, the futures, Dow Jones futures. We have amazing support coming. So this is telling me that this is a really key low that has come in today, and it could possibly mark the bottom. And if, as long as this low is not taken out to the downside, and if it is, then this correction is likely to continue. Now, one thing I would additionally like to do is let's see how much was this decline. It was about 14% from middle of July to late August, and this one has been in Russell. Yeah, there you go, about 10.79%. So I think in terms of percentage, pretty significant. But going below 10% is not going to be that healthy, especially for the small caps. But we have had really important support right here. So I hope you found this video of educational value, and if you did, then please give it a thumbs up. It's really important for me. It just encourages me to keep on making more videos and do more educational videos to explain these things. There is a pending request on my side to actually produce more educational content, and I've been actually working on in the background producing more educational content videos. Maybe sort of put them in a course format, but I would actually ideally like to make that course available for free, at least for the subscribers. So that is something pending more on my side, but in 2025 I'm looking forward to actually completing that project. But here I'm also trying to show as much as I can, and today has been a really good opportunity to actually look at how these harmonics come into the markets, and with the confluence of many of these retracements or patterns coming together. So that's really key. And if you like the way we look at the markets using the technical analysis based on Fibonacci and pattern recognition, we use Fibonacci retracements, expansions, extensions, and projections, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. So thank you very much for watching the video. Good luck and good trading, and speak to you guys soon on Sunday.